The Indian rupee is nosediving. The value of Indian rupee plummeted to a historic low of 86.5 the other day. What does that mean? Does that mean that Indian economy is in a squeeze? Is Indian economy heading towards a perfect crisis? What are the factors that led to the depreciation, sharp and sudden depreciation of Indian rupee? What will be its impact on the future of Indian economy? Is there any reason to panic? I think we need to discuss these issues and let's take a closer look into the emerging situation. Welcome to Insights. I am Hari Kumar. On Monday, the value of Indian rupee fell to a historic low of 86.5. That was the lowest point touched by rupee in the past, over the years. The rupee has actually been falling over a few weeks. Indian rupee's value is always compared with the value of dollar. Actually, it was not just Indian rupee that depreciated. Many Southeast Asian currencies also fell. For example, Malaysian ringgit, Thai baht, then Philippines peso all depreciated. But China's yuan bucked the trend. It actually appreciated a bit. Let's look into the question, do we need to panic at first? My answer is absolutely not. You know, why the value of a currency falls? Nowadays, all currencies gain value from fiat of the government, or fiat means the trust of the government or the capabilities of the government. So I don't think there is any reason for Indians to panic. Then let's say look into what caused the depreciation of Indian rupee. According to financial experts, economists and media, this is the result of a speculative activity. There is euphoria in the United States over the inauguration of Trump. You know, Trump has promised to return or to bring back golden era into the US. So nowadays, every businessman, industrialist in the US is enthused. Trump has promised to slap huge tariffs on imports. On Chinese imports, Trump has promised to slap 100% taxes. On Indian imports, Trump has promised to slap 60% tariff. And US industrialists, investors are all itching to bring back their investment from other countries, especially from China. Another factor is the Bank of America has prophesized. They think that the US Federal Reserve is not going to down interest rates anytime in 2025. So interest rates are going to remain high in 2025. Then the bond yield is also yields are also very high. So these two factors make investors think about investing their money or bringing back their money from other countries to the US. So it means that there is a shortage of dollar in other countries, and that means because the value of a currency nowadays is determined by the demand and supply factors, and so the supply is low and they think that demand is high, so naturally the value of dollar appreciated, and in comparison with dollar, the value of other currencies have taken a hit. That is one factor. Then why did I say you need not panic? The value of a currency falls because of many factors. If the value of a currency falls because of inflation in one country, or because of huge capital outflow, because of political instability or other factors, you need to get panicked. Both those factors are not there in India. India's inflation, though it's a bit high at around 5.5%, it's not anything to get panicked. An inflation between 5 and 10% is okay. This is because In the past also, India's inflation ranged between 4 and 6%, and I don't think there is any reason to get panicked. Of course, when compared to the US, UAE, and China, which are the three biggest trading partners of India, inflation in India is a bit high. The US inflation rate is around 2.8%. In the UAE, it is around 3%. China, it is actually less than 1%. So naturally, there is a tendency to level or to flow out of there is a tendency to depreciate the currency of India. So that might have happened. In the past, whenever the value of Indian currency fell, RBI used to intervene, but this time it has not happened. So that is also one of the reasons for the depreciation of Indian rupee. But at the same time, it reflects the faith or trust of RBI in Indian economy. So RBI knows very well that the value of rupee is not going to take a free fall. And so they are confident, they are happy that let it fall on its own and we will intervene if it is very necessary, or otherwise they are not going to intervene. So I think that also reflects the health of Indian economy. To a certain degree, let the rupee stand on its own leg. That is the theory. Then the other factor, is that India has got enough foreign exchange reserves. There is no balance of payment crisis in India. And there is no political crisis also. On a large scale, no country is planning to withdraw their investment in India. And India's diaspora, expatriates from India, they remit huge amounts every year. Last year, that was the historic high. So I think all those factors means that there is no reason to panic. The other day, speaking about the depreciation of Indian rupee, Chairman of 16th Finance Commission Arvind Pangaria pointed out certain facts. He said that twice the value of Indian currency was devalued twice in the past, 1966 by Indira Gandhi, then afterwards in 91-92. Both times actually it helped the country, though there were huge criticisms at that point of time. Then from 91-92, in 91-92 the value of Indian rupee was around 16 to 17. $1 could fetch only around 17 rupees at that time. By 2002, the dollar appreciated and $1 could fetch around say 40 Indian rupees. Then by 2012, the value of dollar again appreciated and $1 used to get fetched 62 rupees. By 2025, this has become 86 rupees. And he said, over the period, the exports from India have sharply risen, spiked sharply. For example, he said in 2001 merchandise exports from India was around 50 billion US dollar. And that rose to around 300 billion US dollar by 2012. So his point was actually depreciation of value of Indian rupee has helped Indian exports. But there are economists who believe that Indian exports may not hugely rise even if the value of Indian rupee plummets. So that is another school of thought. But anyway, from the historic facts, it seems that the depreciation in value has actually helped Indian exports. But at the same time, it also, look at the example of China, why Chinese currency was not impacted by the strengthening of US dollar. I think because of the manufacturing base of China and China's ability to export, China's huge export surplus. Those factors are behind the strength of yuan. So India needs to take a cue from China. India needs to strengthen the manufacturing base of the country. And I think Government of India has already taken steps. And in the coming budget, the Government of India is going to announce huge incentives for the manufacturing sector. Anyway, what I mean is that there is no need to panic. The falling rupee doesn't mean Indian economy is in a crisis. It doesn't reflect the strength of the Indian economy. And but at the same time, it reminds us that there is need to strengthen our manufacturing base. We need to improve our imports, and we need to lessen our we need to improve our exports, and we need to bring down our imports. Meet you with another topic next time. Till then, goodbye.